Would using a life insurance contract as an investment be the best or worst financial decision you would ever make in your life? Let's clear up the confusion once and for all. By the end of this video, you'll know exactly when life insurance as an investment makes sense, and when it doesn't. Most of us already know that life insurance is supposed to give a big amount of money to the people we want if we pass away while we own an active policy. But what few of us realize is that some policies are marketed not just as protection, but also as a way to grow wealth. The obvious answer should then be, yes, of course it's a good idea. Why not give my loved ones a big sum of money when I'm no longer here, and also have an investment while I'm alive? But here's the catch. It's not always that simple. Choosing the wrong policy can, believe it or not, actually cost you more than not having one over time. And that's why you should care. Because understanding the pros and cons today could save you a lot of money in the future. Before we dive deeper, real quick, if you like that type of financial content, give a like to the video and subscribe to the channel for more. And remember that none of this content is financial advice, but educational only. So let's start with the basics. Life insurance comes in two broad types: term life and permanent life. Term life insurance is simple. You pay a premium, you're covered for a set period, usually between 5 to 40 years, and if something happens to you during that time, your beneficiaries get the payout. If not, the policy simply ends after the term is over. Permanent life insurance, on the other hand, covers you for your entire life as long as you keep paying the premiums, but also has a cash value component that you can think of as a savings account. It's that cash value part that makes people wonder, can this be used as an investment? So, permanent life insurance is primarily what we'll be talking about for the rest of the video. So, on paper, permanent life insurance sounds appealing, since it promises a guaranteed death benefit, as well as tax-deferred growth on the cash value, and the ability to play with that cash value, like borrowing against your policy without a credit check. So, for someone who loves to grow its money and wants something safe, that pitch can sound like a dream. Plus, life insurance agents often present it as a two-in-one deal: protection plus investment. But is it really as good as it sounds? Let's weigh the pros and cons. Here are some of the legitimate advantages of using life insurance as an investment. 1. Forced savings. Because you're required to pay premiums, it forces you to consistently set aside money. 2. Tax advantages. The cash value grows tax-deferred, and loans against the policy are generally tax-free. 3. No market risk in some policies. If you go with whole life, for example, the growth is guaranteed, so you're not riding the ups and downs of the stock market. 4. Dual benefit. You get life insurance protection and a cash value component that you can use later in life. Now let's talk about the other side of the coin, and honestly, this is where a lot of people get burned. 1. High costs. Permanent life insurance is more expensive than term. We're talking premiums that can be 5 to 10 times higher right at the start of the policy for the same coverage amount. That's less money to invest elsewhere. 2. Low returns. The growth on your cash value is often in the 3 to 6% range. Compare that to what you might earn in an index fund over the long term, and it's a big difference. 3. Complexity. These policies are complicated, and many people don't fully understand the fees, charges, and conditions until it's too late. 4. Liquidity issues. Yes, you can borrow against your policy, but if you don't repay it properly, it can reduce your death benefit, or even cause the policy to lapse. So while it looks nice on paper, the trade-offs are pretty significant if you're not careful. But there are situations where it makes total sense. For example, if you're a very high-income earner and you've already maxed out all other tax-advantaged accounts. If you want guaranteed, predictable growth and don't mind paying extra for it. If you need life insurance anyway and you value the stability over potential higher returns elsewhere. But for a lot of people, when weighing the pros and cons of reaching their financial goals, it could be overall better to simply buy a cheaper term insurance policy and put the rest of the money in a financial index or ETF long term. Just do your own math or ask a financial expert you trust, and you might be very surprised. So, is life insurance a good investment? The answer for a lot of people is yes, it still gives returns at the end of the day. But the true question is, does it give the best returns for most people? And you might be surprised how it often isn't actually the case. The only true way to know if it is for you is to simply have a clear goal in mind and to do the math. All right, now I want to hear from you. Have you ever considered life insurance as an investment? Do you think it's worth it, or do you stick to the buy term and invest the rest approach? Drop your thoughts in the comments. I'll be reading them. And if you found this breakdown helpful, make sure to hit that like button, subscribe to the channel, and if you want more financial content like this, click on one of the videos showing at your screen right now.